This is CGTN, China Global Television Network.
Hello there and welcome to Global Business Africa. We'll be giving you insight into Africa's business and financial markets. I'm Uche Okoronkwo, coming to you from Kenya's capital, Nairobi. Let's start with a look at the markets. Now, emerging market stocks broke their longest winning streak today since June. That's as concerns about spreading variants of the coronavirus gave investors an opportunity to cash in. MSCI's index of emerging market stocks fell 0.9% on the day, and that's after gaining 4% over the last 9 sessions. In South Africa, shares were set for their worst day in 3 weeks. And that's after a study showed that Pfizer's vaccine might not be effective against the country's aggressive COVID variant. Now, also coming up on today's show. Nigeria records its first growth in the fourth quarter and makes its way out of recession. A YouTuber faces a grilling from U.S. lawmakers over the Reddit rally in shares of GameStop. And there's a growing demand for culinary flowers in Tunisia's high-end hotels. Well, our starting point tonight is in Nigeria. The National Bureau of Statistics says the country's economy has exited recession in the fourth quarter of 2020. Now, it also adds that the gross domestic product rose 0.11% in the 3 months between October and December from a year earlier. For the full year 2020, the economy contracted 1.92%, and that's better than the International Monetary Fund projection. Well, let's find out more on this. We're joined by Deji Badmus in Lagos. Always good to see you, Deji. Now, of course, some experts are saying that this growth could point to the growing dominance of Nigeria's non-oil sector. Give us a look into the factors and, of course, the sectors that drove this recovery.
Indeed, Uche, those experts, of course, would not be wrong. It's a clear demonstration of the dominance of the non-oil sector of the economy. Unfortunately, even though it's contributing so much to the country's GDP, it's not yielding as much revenue as the oil sector. But all the same, the reason why Nigeria has exited this recession is because of the performance of the non-oil sector, growing by 1.69% in real terms. And that growth propelled by, of course, you look at subsectors now, some key sectors in the non-oil sector. You talk about information and communication, agriculture, manufacturing, real estate, construction, mining, quarrying, as well as some other sectors that actually recorded positive growth. Now, even manufacturing as well actually recorded positive growth. But then let me say this, Uche, you need to disaggregate these sectors now to really understand, because in actual fact, when you look at the manufacturing sector, for instance, some subsectors in the manufacturing sector actually did very well. For instance, you talk about the cement industry did very well. But when you talk about key manufacturing, honestly, it witnessed contraction, clear demonstration that a lot of work still needs to be done. But let me talk about those sectors now that recorded positive growth now in the non-oil sector. You talk about cement, food and beverages now. You talk about the chemical and pharmaceutical subsector. You talk about the plastic, rubber, motor vehicle assembly, motion picture, sound, and musical industry, recording 2.51 percentage growth. Broadcasting as well, recording 4.48%. Now, real estate is actually quite a surprise because, during the lockdown, real estate all but collapsed. But clearly, during the easing of the lockdown, real estate actually made a rebound and recording a positive growth rate now of 2.81%. You look at the services sector and crop production. Agriculture, of course, seriously affected as a result of insecurity and then the lockdown. But then with the easing of the lockdown now, we saw growth, especially with crop production. Crop production growing by 3.68%. So you take all of this together, but the biggest growth under the non-manufacturing, of course, is telecommunication, information and communication. And under there you have telecommunication, and that's quite understandable. You know, with the lockdown during this period, people use the internet a lot, you know, so that's understandable. The growth rate recorded there, quite massive. So all of this, all together, you know, add up to make the non-oil sector now push Nigeria now out of the current recession. But, you know, as I said, you look at the figures, there's still a lot of work to do. Manufacturing is still down. A lot needs to be done there to improve manufacturing. A lot of other key sectors are still down. So there's still plenty of work to do in this economy, Uche.
Right. And on that note, this does raise the question as to whether this resurgence is translating on the ground. Are businesses and households in Nigeria seeing a slow recovery from the fallout of the COVID-19 pandemic?
Well, we're beginning to see some recovery, but I wouldn't say it's a general recovery, and I wouldn't say you know that it's affecting everyone. I mean, the recovery now, we're beginning to see some glimmer of hope. So I wouldn't say we're seeing overall translation, so to speak. It's always a problem matching this GDP growth now with the reality on ground. You know, a real growth, so to speak. So inclusive growth is still a problem that the economic managers would have to work on. But obviously, we're beginning to see a rebound in some, you know, in some sectors. Pharmaceutical sector, for instance, we're beginning to see a rebound, clearly demonstrating that what the central bank has been doing all this while. I'm talking about the massive intervention that the central bank has been making since the outbreak of this COVID-19. I think it is beginning to yield results. If not for those interventions, as a matter of fact, there's a possibility that Nigeria might still be in recession. You would not have this positive growth. So there's still plenty of work to be done. We're not seeing a complete translation now of these economic growth. Now, we're not seeing that translate to improvement in the lives and living of the people. A lot will still need to be done. Unemployment is still very high. Quite a number of companies are yet to come back. Some firms may actually not reopen. Some jobs have been lost and may not come back. So plenty of work still to be done to get this economy up and running, no doubt at all. Uche?
And of course, Deji, all eyes are on how this will impact monetary policy going forward, and of course the CBN's rate decision, especially now as we're seeing the Naira continuing to hit record lows, currently at over 400 Naira per dollar. How do you expect to see this impact monetary policy?
First off, when the next monetary policy committee holds its usual meeting, I do not, I personally do not see them, tinkering with the rates now. I think they might just decide to hold rates because, to be candid, as I said before, I think we're beginning to see the impact of what the CBN has been doing over the past few months. I'm talking about the massive fund injection. We've seen the CBN spend so much to actually kickstart this economy, to ensure that the effects of the pandemic now do not grind the economy to a halt. So we're beginning to see pharmaceuticals, for instance, improving. Manufacturing, of course, plenty of work still needs to be done there. The CBN has actually injected funds into the manufacturing sector, but you know, we're not seeing positive results yet, but the contraction is still very low. Now, in terms of the exchange rate, I think what we're going to see is that I do not think we're going to see any kind of devaluation in the next MPC meeting. I don't think there'll be any announcement like that. I don't think that is in the immediate plans of the CBN. The good thing for Nigeria is that we're beginning to see the price of oil pick up. It's around 63, close to $65 per barrel. Don't forget our budget benchmark here is around $40 per barrel. So you still have enough headroom. The government is earning a lot now. The most important thing is to ensure that it keeps oil production high, which of course is not happening at the moment, and that condensate too, remains high. If the country is able to keep its output, oil output now, the production output high, of course it will earn more. And the central, of course, it means Nigeria will earn more in terms of foreign currency. So the idea of a devaluation might just not be happening now. And we might see some stability in the exchange rate going forward if prices continue to remain at this level or move up slightly. That's the way a lot of people see things playing out.
Well, we'll certainly continue to watch that closely. As always, many thanks, Deji, for your insights there. That's Deji Badmus joining us there in Lagos. Let's stay in the country. Nigeria also says it has ended costly fuel subsidies for good, lifting pump price caps despite a backlash from unions. But oil companies and lobbyists say the government is still setting gasoline prices at the ports using an unpublished price template, and that is stifling competition and wasting public funds on subsidized fuel. Here's CGTN's Terry Wangari with the details.
Nigeria's commercial capital is filled with hundreds of yellow minibuses, one of the main modes of transport in Lagos. Customers line up despite the coronavirus pandemic. But despite this, drivers in Lagos are facing a different problem.
Fuel keeps going up instead of coming down. Fuel is the only thing government keeps increasing whenever they want to develop any infrastructure in the country. There's nothing we can do about it. They are the government.
While Adekanbi is feeling the pinch, observers say government coffers are at risk too. Nigeria said in March that it had ended costly fuel subsidies and announced in September it was no longer fixing pump prices. Since then, Lagos prices have risen to just over 42 cents per litre from 38 cents.
Of course, we do know that if you allow it open-ended, completely open-ended, without any control, without any process, there could be abuses in the first instance. Of course, that market forces can actually take that out, but we're not going to rely on that. Government is very keen on making sure that people are not exploited. And that's the engagement that is going on between us and Labour to agree on a framework for pricing which will not be exploitative.
It's alleged that the NNPC was still setting gasoline prices, but at fuel depots rather than at the pump. Those prices, set using an unpublished template, block private companies from importing, leaving the company as the sole gasoline seller and opening it to continued losses. The chairman of the Major Oil Marketers Association said NNPC was losing at least 8 cents per litre on gasoline in early February. This is based on the international fuel price and the publicly available dollar exchange rate. With a daily consumption of roughly 40 million litres, that's $3.15 million per day.
The country is bleeding, essentially. The question is, how long can we continue and what can be done? I don't think any entity or any country can survive doing this forever. Crude oil itself is a wasting resource, and apart from that, the world is actually moving away from fossil fuels.
Nigeria, Africa's largest oil exporter, imports all its fuel, a sore point for its government. Its 200 million citizens view cheap petrol as one of the few consistent benefits from a system where graft and inefficiency are ingrained. Back in his yellow bus, Adekanbi is mulling his own solution, switching to a diesel engine. The fuel is not regulated and more expensive, but he says it lasts longer in his tank and he doesn't have to worry about shortages. These are the things drivers and car owners are willing to do to make ends meet. Terry Wangari, CGTN.
Well, let's shift focus to Kenya now. The country says it is optimistic of a trade deal with the United Kingdom as trade talks with another traditional ally, the United States, continue. The UK has pushed a ratification deadline to allow its House of Lords to go through the deal, while the new US administration is yet to sign the trade pact, which was negotiated with the administration of former US President Donald Trump. Here's CGTN's Robert Nagila with more.
For the United States, a key trade and security partner, tariff policy and market access are top on its agenda. Kenya, on the other hand, is eyeing a new deal with Washington before the 2025 expiry of the Africa Growth and Opportunity Act. AGOA grants the country and 40 other African states duty-free access to the U.S. market with more than 6,000 product lines.
We have the opportunity to strengthen our relationship with a free trade agreement.
Trade between the two countries stood at $118 million in 2019, up 4.9% from 2018. With the UK, Kenya preferred a bilateral approach because of Brexit. Nairobi is keen on securing duty-free and quota-free market access to the UK. Among Kenya's top 5 export products to the UK are coffee, tea, vegetables, flowers and fruits. The trade pact was signed in December.
Both Kenya and the United Kingdom have strong resolve to deepen their economic ties.
But the political transition from former President Donald Trump's administration to that of President Joe Biden has left the talks in limbo. The Trump administration had pushed a unilateral approach, while Biden is said to prefer a multilateral approach.
The Trump administration was quickly trying to work on to withdraw from the World Trade Organization and then begin to effect its own agreements on a bilateral basis with different countries. And that is probably going to be stopped.
And early this week, the UK Parliament requested for more time to review the trade deal with Kenya. But experts say this is normal before it is ratified.
I don't think there is actually a stumbling block. They just want assurance in terms of how this will impact on the regional cohesion in East Africa.
The consensus from Nairobi is that a lot of progress has been made in talks with both countries, but a few issues still remain. When those talks will be concluded is yet unknown. Robert Nagila, CGTN, Nairobi, Kenya.
And now let's take a look at some corporate headlines today. Zimbabwe's Econet Wireless has been barred by the country's High Court from sending text messages to subscribers listing daily coronavirus infections and deaths. Now, this comes after the mobile operator was sued for sending coronavirus updates as infections and deaths surged last month. Meanwhile, Google and Rupert Murdoch's News Corp have signed a 3-year multi-year partnership for payments for content from news sites across its media empire. This comes as a proposed legislation in Australia threatens to jeopardize the tech platform's future operations in the country. News Corp's brands are expected to enter into an ad revenue sharing agreement and develop a subscription platform, while YouTube will invest in video journalism as a part of the deal. And Barclays has disclosed a 30% drop in pre-tax profits to $4.32 billion for 2020. That's down from $6 billion in 2019. Now, this follows the bank's decision to set aside billions of dollars for loans expected to turn sore due to the pandemic. Barclays also announced that it will resume dividend payments to shareholders of 0.014 cents per share and embark on a share buyback worth about $977 million. And finally, Air France KLM has warned that renewed COVID-19 lockdowns are pushing it deeper into the red. This is after it reported a net loss of $8.5 billion for 2020 and postponed a key midterm profitability goal. The airline group expects to fly at 40% of its pre-crisis capacity in January to March as tougher travel curbs widen losses, which were recorded in the fourth quarter. And that's a look at our corporate headlines. Well, let's head into a short break now, still coming up on the show. Ethiopia defends restrictions it placed on the country's telecoms bidding process. And Kenya takes advantage of logistics market amid the coronavirus pandemic.
The world economy as we know it is about to change. Global business reports highlight emerging markets, developing countries, and dynamic sectors worldwide. We feature top analysts and newsmakers to provide perspectives on every facet of business. From an on-the-ground perspective, we provide you with balanced and objective assessments. Fast, sharp, and insightful. Global business, only on CGTN.
Every story starts out like this.
Okay. We'll head up now.
But beyond the rush of the numbers, there's always a more fundamental question. What happened? Who has been affected? When market-moving decisions are made, who's responsible? And why?
Let's get some reaction on ground. Joining us in Johannesburg is Uche Okoronkwo.
Hello, Nairobi.
This is how all stories begin. See how they end. Only on Global Business. Africa is the nexus of enterprise, and Global Business will tell you why it matters.
From the mega investment projects to multi-billion-dollar mergers and acquisitions.
Africa today collects, just in terms of revenues from taxes alone, $545 billion a year. If you take 10% of that and you devote it to the energy sector, problem solved.
All this on Global Business, weekdays at this time on CGTN. Welcome back. Well, let's head to Ethiopia now. The country has defended restrictions placed on its telecoms bidding process. The government is looking to invite 2 new telecoms companies to enter the Ethiopian market. Now, a third firm will partner with the state-owned Ethio Telecom, which currently enjoys a monopoly. Here's CGTN's Coletta Wanjoy reporting from Addis Ababa.
For decades, Ethiopians have lacked the power of choice when it comes to communication providers. But later this year, that is set to change. So far, 12 foreign companies are eyeing the country's telecoms sector. The government says the new entrants can use existing infrastructure. Critics say that limitation makes the offering less attractive to bidders.
If you look at it strictly in business sense, if you are assured that the new entrants and the incumbent would have equal access to this infrastructure and that there would be fair pricing, and that the ECA can regulate this properly, of course, you would want to put in more money into infrastructure when one is already available. So, and also as a country, I think it makes sense to make sure the billions that we've spent into this is put into meaningful use.
But despite the invitation of new players, Ethio Telecom will get a monopoly on lucrative mobile money services. The World Bank, which is supporting the process, says Ethio Telecom should receive less preferential treatment to allow for more competition. It warns that restricting bidders to existing infrastructure could easily slow down the pace of network rollout, especially in rural areas. Some analysts have called for the government to go further. They argue that other sectors like banking should be opened up alongside telecoms.
We've made significant reforms in the economy. One area that we've not opened up as of now is the banking sector. So the banking sector, as we speak today at this, is close to foreign investment. But would it be the same in 2 years, in 6 years down the road? I don't know, but I have my doubts because the kind of reform we make depends on what the economy needed. At this point, we felt the financial sector reform needs to pass through different stages of reform before we fully open up the financial sector.
The World Bank is investing $200 million in the telecoms opening process. That money will go towards strengthening the telecoms regulator and boosting the country's digital economy, which is still in its infancy. Colette Wanjohi, CGTN, Addis Ababa, Ethiopia.
Meanwhile, Kenyan logistics firm Mitchell Cots has set up a $25 million facility at the main Nairobi airport. It is aimed at the processing of perishable cargo, including temperature-sensitive COVID-19 vaccines. Now, as the rollout of vaccines offers a lifeline for some companies that were hard hit by the pandemic, South Africa's health ministry is set to issue tenders to store and distribute shots.
Situated in the heart of Nairobi, Kenya's Jomo Kenyatta International Airport is set to switch from handling fruit to importing vaccines. With farm commodities making up part of the country's exports, the transition is expected to be smooth.
The fortunate thing about Jomo Kenyatta, it has the biggest capacity within the East Africa region, even including South Africa, because of the nature of our trade. We send in a lot of horticulture to Europe. Those horticulture facilities are refrigerated facilities. They can fresh produce. So it is easy to convert and use for an emergency if there was a requirement.
Following a recent surge in COVID-19 infections and the discovery of new variants, companies and governments have embarked on establishing cold chain storage and delivery systems for vaccines. For Mitchell Cots, it has applied for international certification by health authorities to handle the imports, adding that it can handle vaccines which need to be kept as cold as -30 degrees Celsius. The firm has also announced plans to modify its existing pharma unit at its $25 million facility at the airport, adding extra cabinets to hold the vaccines and enhancing security.
Because the pharma place we have now is needed, it's small for the vaccines. When we designed this, we didn't have in mind that an epidemic like COVID would be there and the number of vaccines would come.
The rollout of vaccines is expected to offer a lifeline for some companies that were hard hit by the pandemic. With the negative impact on global economy, many hope for a fresh turnaround amid the rollout. Daniela Pearson, CGTN.
Let's turn our attention to economic cooperation between Egypt and China. Yasser Hakim has met with the Egyptian Minister of Public Enterprises, Hisham Tawfiq, and they spoke about how some Chinese companies have been contributing to his plans to overhaul and upgrade the public business sector in the North African nation. Take a look.
Our strategy is based on 4 tracks, actually. The first track is looking through a deep and thorough SWOT analysis on each and every one of our 120 companies under management. And we concentrated on the top 60 with a bigger effect on the portfolio, whether loss-making or even profitable companies, but ones which can be enhanced. Second track is the infrastructure, and by infrastructure I mean the laws, the policies and procedures inside the companies. And we introduced ERP systems in 63 companies out of the 120 companies. The third track is to provide with it a database for the unutilized assets in the companies, mainly lands, and we have located a good amount of land. We have sold some of them to provide finance for the repaying or settlement of the debts, and for the development plans. We settled something close to $2.5 billion of debt through exchange of land.
One of the initiatives that you have orchestrated and for the first time in Egypt is to try to produce and assemble electric cars in the country using an Egyptian state-owned company, which is the Al Nasr automotive company. Tell us more about this and how you managed to break the deal with China.
When we talk electric cars, we talk China because China has a very advanced position in the global market, especially for producing the lithium-ion batteries. China has something close to 50% of the production of EV cars, so went to a Chinese company, one of the big four, and we went first in September 2019. We made a visit, we chose the car. The company will help us rehabilitate our plant, which is in good shape, and rehabilitate with the target of producing 25,000 cars per shift. And we'll start, of course, with one shift, and if things develop well, we can go to another shift for a maximum of 50,000 cars. And the idea is to start with a 50% local component that can be increased dramatically if we can do together through an R&D, do something to invade the electric battery domain and start producing batteries as well.
Another form of cooperation was with China, was the Delta Steel. Tell us more about how you're working together.
Delta Steel was the first plant in Egypt. It was built in 1946 with a very old technology. It was nationalized in 1960, and there was very little improvement in the plant. I came and I decided to change the technology altogether, and we contracted with the Chinese company with a technology called induction furnaces. We will have a total of 500,000 tons a year of billets. We will stop at the billet phase, and we are using scrap iron as our feedstock. I want to thank the Chinese company for fulfilling its obligations in such a difficult time.
Meanwhile, South Africa's agricultural sector continues to breathe life into its economy. The maize sector is expecting its second biggest summer harvest, and that's after planting more than 6.2% more area to grow grain. This has resulted in a good supply for both the domestic and export market. Here's CGTN's Travis Andrews with more on that report.
It's another bumper yield for another important crop. South Africa's maize industry is expecting over 16 million tons of summer grain this year. That includes white and yellow maize, as well as soybean and sunflower, which have all benefited from good seasonal rains, as well as expansion in areas used for growth. The harvest puts the maize industry and the country in a fairly good position.
First of all, we will be able to provide enough staple for our own people. Then even the exporting countries, nearby countries like Zimbabwe, Mozambique, Eswatini, even Namibia, these countries are dependent on our exports. So yes, there will be ample available for them.
Despite the expected increase in supply to the market, the prices are still holding steady, allowing farmers to reinvest their returns. Changes in consumer demand have also lifted the domestic sector, which consumes more than 11 million tons of maize.
The fact that we have enough staple will soften, in my opinion, inflation pressure on that side. We have already seen some changes in demand, changing maybe, eating more porridge, maize-related products in a diet instead of bread, other grain products.
While the bumper harvest may have come as a result of a fairly late-stage planting process, this year farmers have decided to plant their seeds fairly early to increase their chances of success for the next season. And technology has been at the forefront of not just this harvest, but will be for those to come as well.
The seed technology, the technology applied by farmers, the knowledge base are excellent. So that combination, allow farmers just to fly, but primarily the rain can at the right time.
For now, agricultural stakeholders have also credited emerging maize farmers for their role in this year's crop, which came as a welcome boost against the backdrop of a challenging pandemic. Travis Andrews, CGTN, Cape Town.
You're watching Global Business Africa. Let's take a short break now, still to come. A YouTuber faces a grilling from US lawmakers over the Reddit rally in shares of GameStop. And Facebook blocks Australian users from accessing news stories on its platform.
Taken me completely out of my depth, but at the same time it's exciting. It's new, it's different, it's a challenge.
It's really exciting.
Over the last 48 hours of rain.
No one again began holding guns. Machine guns from police forces toward the protesters.
Were you worried about your life at that particular time?
Not at all.
What is your assessment of the state of the continent today?
Africa has the potential to power itself.
Excuse me.
Business in Africa is at the crossroads. We celebrate those who are adopting and thriving despite the challenges, from grassroots to big businesses. Global Business takes you along for the ride as we track the making of a giant. Only on CGTN.
How will your world change today? What happens here? What happens there? Or what do you make happen for yourself? If it matters to you, it matters to us too. Your stories are the stories that need to be told. Africa Live. Find your voice.
Well, let's get the latest on that GameStop saga. A man who became a key player in frenzied trading of GameStop's shares last month has been hit with a class action lawsuit. Now, Keith Gill allegedly duped retail investors into buying inflated stocks while hiding his sophisticated financial background. Gill allegedly bought GameStop shares for around $5 and then used social media to drive those shares from around $20 per share in early January to more than $400 per share in just 2 weeks. Well, Gill is also appearing before the U.S. Congress alongside several others involved in the so-called Reddit rally. Well, of course, that Reddit rally hearing at U.S. Congress kicks off today. Let's discuss this further with Giles Gibson. He joins us now in Washington. Giles, great to have you on the show. Now, of course, the debate seems to boil down to whether this was market manipulation by factors such as Gill and whether retail investor trading and the tools available to them should be limited going forward. So what do stakeholders and, of course, regulators hope this hearing will achieve?
Well, Uche, this hearing in the House Financial Services Committee has now kicked off, and its title is Who Wins and Loses When Short Sellers, Social Media and Retail Investors Collide? And really the panel of witnesses that we have testifying to Congress reflects this just extraordinary cast of characters who all coalesced around this struggling video game store and its stock price. We have the CEO of Robinhood, this stock trading app which is popular amongst retail investors, who has apologized for halting trading on certain stocks at the height of the GameStop frenzy. We also have the CEO of Melvin Capital, which is a hedge fund which was actually shorting GameStop and took heavy losses as a result of these retail investors piling into that stock. And we also have Keith Gill, who you were just talking about there, also known as Roaring Kitty Online, who posted all over social media encouraging other retail investors, other day traders to pile into GameStop, and then we saw just that extraordinary spike in its share price.
Now, of course, some had said that events such as the GameStop stock surge are really confined to just a few corners of the market. Is there now significant concern that what happened with GameStop could impact other stocks and, of course, the broader market going forward?
Yeah, we're certainly already seeing retail investors piling into other so-called meme stocks, as they're now being called. AMC Entertainment, which is a big cinema chain, which has, of course, been devastated by the coronavirus pandemic. That's seen its share price pretty volatile up and down over the last few weeks or so. The same with BlackBerry, of course. Once upon a time, that was the most popular mobile phone brand before it was completely overtaken by Apple's iPhone. That's also seen a lot of volatility in its stock price and some attention being paid to it by these retail investors. And it's also worth noting that Wall Street banks and research firms are actually now scraping data from Reddit threads, from social media, to try and stay ahead of the curve here and try and find out which stock could become under focus next time around.
Well, Giles, is it exactly clear what action the Securities and Exchange Commission and, of course, other regulators can take on this issue? And certainly, what would be the fallout from any move taken?
Well, the SEC rather haven't announced any concrete moves yet, but we are getting reports that they are looking into bringing in new regulations which would effectively require there to be more data collected on some of these short-selling practices. Actually, the Dodd-Frank Act, which was brought in back in 2010 in the wake of the 2008 financial crash, that actually did include some regulations that should have been brought in that would have required more data to be collected on short-selling practices in Wall Street. But it appears in the 10 years or so, 11 years since that legislation was passed, that those regulations just haven't been enforced as much as they were intended to have been.
And that's important because currently investors on this Reddit group, they seem to be discussing the next big trade to jump on. So, Giles, is this a new thing or trend that, of course, is looking like it'll pick up momentum as time goes?
Well, I've actually been keeping an eye on this Reddit thread that's one of the most popular ones. It's called Wall Street Bets, as this hearing has been going on up on Capitol Hill here in Washington. And I can tell you that a lot of users are very angry about the CEO of Robinhood for halting trading several weeks ago at the height of the GameStop frenzy. There's also a lot of anger being directed towards Congress and actually towards the SEC and regulators as well. I've also, Uche, been keeping an eye on GameStop stock as it comes back into focus with this hearing up on Capitol Hill. It's been up and down all the way through the day. Just a few minutes ago, it was down by around 2%, and it now appears to be back just about in the green as well. So keep an eye on GameStop stock as well as this hearing goes on for the next few hours.
Well, quite interesting events there. Many thanks for that update, Giles. That, of course, is Giles Gibson joining us there in Washington, D.C. Well, elsewhere in Europe, auto sales remain under heavy pressure due to the ongoing coronavirus pandemic. And car makers there are making up for their losses by looking to China. Here's CGTN's Trent Murray reporting.
The COVID-19 pandemic continues to pummel Europe's auto sector, with the latest statistics showing just how far new car sales have slumped. New vehicle registrations plunged by 26%, according to the European Automobile Manufacturers Association. Spain led the drop with a 52% fall. And here where I am in Germany, well, new car sales fell by over a third. Long-running lockdowns across much of Europe have meant that car dealerships and showrooms have largely remained closed. And experts say consumers are also hesitant to invest in new vehicles given the economic uncertainty plaguing Europe. But while sales are sluggish in Europe, the economic rebound in China has helped rescue the earnings of several major car makers. China is the biggest market for German automakers Volkswagen, Mercedes-Benz and BMW, and for all three, the resurgence of China's economy has helped soften the blow for Europe's slower recovery. BMW in particular is looking to make further inroads into the expanding Chinese market. It's just signed a new deal with its partner Brilliance to boost production at its plant in Shenyang. 1 in 3 of BMW's new cars are already sold in China, but the company says it wants to grow that share even further with this new manufacturing deal. And in a sign the race towards electric vehicles shows no signs of slowing down, American automaker Ford has just announced that its entire passenger range will be electric in Europe by 2030. A commitment that we're likely to see more of as car companies accelerate their efforts to steer away from fossil fuels. Trent Murray, CGTN, Berlin.
Meanwhile, Facebook has blocked Australian users from accessing news stories on its platform. The move by the tech giant is in response to Canberra's proposed legislation that will force Facebook and Google to pay for the use of Australian news content. Greg Navarro reports from Sydney.
An estimated 15 million Facebook users here in Australia, spread out across neighborhoods like this one, woke up this morning without news in their morning feeds. Now, it didn't take long to discover that Facebook's ban went further than just news, blocking access to a number of things, including fire and emergency services, even the Bureau of Meteorology. That prompted an angry response from Australia's government, the federal treasurer calling it wrong and saying that it proves the immense market power of these digital giants. Now, Parliament is considering a bill requiring Google and Facebook to pay Australian news media companies for their content that appears on the platforms. It's something the tech giants have resisted. In fact, Google had threatened to remove its search engine, but has since worked to strike separate deals with various media companies. Facebook has gone much further and said the move is justified because there's no clear guidance on the definition of news content. Now, it's also blocked users elsewhere from viewing or sharing news stories from Australian media outlets. The treasurer has reportedly spoken with Facebook founder Mark Zuckerberg. Access to some of those non-news pages have been restored, but not the news. And of course, there is a rising backlash here against Facebook, including a movement called Delete Facebook. Critics say restricting access to essential services is unthinkable, and that blocking access to news means that more people might be tempted to rely on misinformation. Greg Navarro, CGTN, Sydney.
And moving on now, let's check in on commodity markets today. Weather patterns in Texas continue to drive up oil prices as, of course, the unusually cold weather hampered output in the largest crude producing state in the U.S. Now, Brent crude topped $65 a barrel for the first time in over a year, while we saw WTI rising to $61.8 a barrel. Both are up over 300% since last April. Meanwhile, benchmark corporate prices rose over 2%, their strongest level since 2012. And traders say that's on concerns over a market deficit, which is driven by tight supply and strong demand for the industrial metal. Well, let's take a short break now, still to come on the show. There's growing demand for culinary flowers in Tunisia's high-end hotels. And Winnie Madikizela Mandela's legacy lives on in South Africa.
Africa is a continent of diversity, with varied climates and enchanting geography, and a people so distinct, but with a shared enduring spirit. We are at the heart of the continent to bring you the untold stories.
Let's have a look.
We celebrate Africa as it shapes its own destiny.
I've been Shirushi, Tunis, Cairo, Juba, Johannesburg, Ethiopia, Tanzania.
Africa Live. Find your voice.
Images may appear to be identical, but looks can be deceiving. The difference is not always obvious. It has to be discovered. There are always different sides to a story. We put the focus on the details. To see more, to understand better. CGTN. See the difference.
You don't find the stories of North Africa by sitting on the sidelines. No one else will take you where we can in North Africa. And no one else will show you what it's all about. CGTN, see the difference.
Well, let's go to Tunisia now, where an appetite for edible flowers is growing. Although Tunisians already use certain flowers in their traditional cuisine, one entrepreneur says she hopes the flowers she grows will spark a new culinary culture in the country. Now, many of these flowers taste like a certain food. They're also used for decorative purposes in food or drinks at luxury hotels. Here's CGTN's Charm Gono with more.
42-year-old journalist Sonia Ibdi launched her edible flower business in 2019. She turned to organic farming after coming back from France. She brought back with her 42 seed varieties and now uses her own seeds.
At the beginning, when creating my project, I relied on exporting because edible flowers are not part of our culinary culture. But thank God, after the first advertisements posted on my Facebook page, I was very surprised to find that there were a lot of restaurants and chefs in Tunisia looking for edible flowers. To be honest, I was pleasantly surprised.
Ibdi says she wants people to feel like they're eating fruits and vegetables. Among the flowers she grows is the nasturtium.
This is the queen of edible flowers, very popular with cooks and very healthy. It tastes like a radish. It contains a lot of vitamin C. 100 grams of nasturtiums contains 300 milligrams of vitamin C.
In hotels like these, chefs use the fresh flowers for dishes from soups to salads as well as teas.
Each chef has his way of interpreting or using the flowers. Some, for example, fill zucchini flowers and then have them sorted or roasted in the oven.
Indeed, the flowers have gone beyond introducing a new look and flavor. But it's not been an easy journey, as Ibdi recalls. The business involved a lot of paperwork, and she even sold a car to finance the business. As well as edible flowers, Ibdi has planted a large quantity of strawberries on the 5 hectares of land she leases. But the authorities say growing strawberries is in breach of a lease agreement. Ibdi now fears seeing her business wither. Chamhono, CGTN.
Now, Winnie Madikizela Mandela, fondly known to South Africans as the mother of the nation, was an iconic hero of the struggle against apartheid. It's just over 2 years since she died, and activists across the world have been trying to keep her legacy alive with various initiatives. Well, one such project involves a beautiful commemorative blanket. Here's CGTN's Sumitra Naidu with more.
Winnie Madikizela Mandela was loved by millions of South Africans. Even though she courted a fair amount of controversy, Madikizela Mandela was a true freedom fighter. She spent 491 days behind bars during apartheid rule in South Africa. Tieuns Botha of Kingsday Textiles wanted to create something that would remind people of her bravery.
It's almost like energy has called us to that, to commemorate and honor this incredible woman. And the best way that I could ever think of, that will make sure, as our slogan says, Mama Winnie forever in our homes and hearts, is to put an image that is a symbol not just of Mama Winnie and her principles and what she stands for.
After meeting Madikizela Mandela back in 2015, Botha began creating a blanket to remind people of her warmth and devotion to her community. Madikizela Mandela was the first black medical social worker at the Chris Hani Baragwanath Hospital. She shared a particular concern for young women.
Mama Winnie always very specifically said to me that she was very concerned about the female youth in particular.
A blanket is significant in African culture. It is often used in traditional ceremonies, and in some cultures, women must wrap themselves in blankets after someone has died.
It's a beautiful thing that Mama left. She lived a very difficult life. And, you know, as a woman, they say you strike a woman, you strike a rock. So she is the epitome of that. She had to be there to make sure that a possibility of a democratic country where everybody lived as one people, not seeing any race, any color, where we see women are also realized in the space of business, in the space of politics, in the space of the community.
The blankets are manufactured in China. Each one comes with a certificate and a unique number to authenticate the purchase. The picture printed on the blanket is taken from her book titled 491 Days alongside her prison number. Sumitra Naidu, CGTN, Johannesburg, South Africa.
And before we leave you today, here's a quick look at how Africa's currencies performed. South Africa's rand weakening today as a recent rise in U.S. Treasury yields and upbeat economic data in the U.S. sapped that risk demand and, of course, prompted some profit-taking on recent risk asset rallies. Meanwhile, the Naira continues to hover at a record low of 407 to 409 Naira per dollar. That is at the official NAFEX window. Dollar supply, of course, has dropped by about 71% in Nigeria since Monday. As a result, the Naira has traded in the 400 per dollar region for about 78 days now. Well, that's it for this edition of Global Business Africa. Remember, you can send your feedback to the contacts on your screen. You can also follow us on our various digital media platforms. From me, Uche Okoronkwo, and the rest of the team, thanks for watching.